Welcome to Think Money with Benny. Here on the channel, we talk about investing in the stock market to produce passive income. If you're new here, I talk about how I grow my portfolio, what strategies I use, which stocks I invest in. That's what my content is all about. If this interests you, click the subscribe button so you don't miss any of my upcoming videos. And don't forget to hit the like button to help support the channel. Today, we're talking about selling put options, also known as cash covered puts or cash secured puts. It's my new favorite way of making passive income in my stock market portfolio. I'm going to talk about why I sell cash covered puts, what you need to sell puts, how it works, what are the possible outcomes, and what's the risk involved. I'm also going over my play with WYNN stock to show you how I do this. There's many videos here on YouTube about selling puts. Some are good, easy to understand. Others are confusing with wrong info. My goal here is to go over my thought process, letting you see things from my perspective. The fact of the matter is this: when it comes to trading options, it's not easy to understand at first. But if you take the time to learn, it's one of the easiest ways to make passive income. I've been selling puts for the past several months and I haven't lost any money. That's because you can't lose money with this strategy. I know I shouldn't use the word can't because anything's possible in the stock market, but I'll explain how it works. Let's start with why I sell put options. I began looking into this strategy soon after interest rates for online savings accounts became useless. I needed a new way to keep my idle cash working for me. After doing research on selling puts, I understood that it's a conservative way to make money. While it does carry some risk, the return on your money is much greater than any online savings account. That's reason number one. Another reason I sell puts is to potentially buy 100 shares of a stock at my selected price while collecting money in the process. Think of this as someone paying you money to buy 100 shares, as opposed to just going in the market and buying 100 shares outright. To summarize, I sell puts because I want my cash to generate income, or because I want to get paid to potentially buy 100 shares of a stock. Now, what do you need to sell a put option? The first thing you need is the experience in the market. You need to figure out what's your investing style, your risk tolerance, what stocks you like, which stocks you don't like, gradually increasing your confidence as you invest. As you're figuring this out, you should be able to build a stock portfolio with a good cash amount. I personally have a 6-figure dividend portfolio that I share here on the channel. 40% of my portfolio is in cash, which allows me to sell cash covered puts, and it allows me to take advantage of market downturns. To summarize, you'll need experience and have cash ready to be able to sell cash covered puts with confidence. Let's now go over how this works. If you're not familiar with options, much of this video might go over your head, but just keep doing research and it will all make sense. First, you need to pick a stock that you like. You know it's a great company, you're comfortable and familiar with the share price. You'll need enough cash in your account to potentially buy 100 shares of that stock. The cash amount you need will depend on the strike price you select for the contract that you're going to sell. Next is knowing your desired outcome for selling a put. You can aim to collect premium by selling a put at a strike price that's unrealistic for that stock. Or you can aim to get assigned 100 shares by choosing a strike that's closer to the share price. In either case, you're going to get paid. The premium you collect is deposited into your account immediately after selling a put contract. Let's look at a trade that I'm currently in right now and go over my thought process behind it. WYNN is a stock I've been following for a while. They operate casino resorts which cater to high-end clients. Taking a look at the chart on WYNN, which by the way, I don't do any technical analysis. I just look at the chart, see where the price has been, check support levels, keep up to date on the company news, and stock sentiment. I like to keep things very simple. Quick backstory: in March, I decided to pick up 25 shares of WYNN at 55. Over the past several months, I've seen WYNN trade between 70 and 90. I sold my shares last month at 90 for a profit because I didn't think the stock was going to move any higher due to current conditions. But now it's at 70 again, and and I like the idea of getting back in. So now how do I go about selling a cash covered put? I look on Robinhood, search the stock I want. Side note, I'm Team Fidelity all the way. I only use Robinhood to look at price movement and option contracts because it's fast and easy. Once I'm in the options chain, I select an expiration date. I normally choose 1 week to 4 weeks out. In this case, let's look at October 16, which is about 2 weeks from today. Since I've already established that I'm comfortable buying 100 shares of WYNN at 70 a share, I need to have $7,000 available in my portfolio. Once you do this, your brokerage will set aside that money until your contract expires or until you want to close out that contract. Next, we're going to look at how much premium is being offered for selling the $70 strike contract. Someone is willing to pay me $224 for selling this put. That $224 will be deposited into your account, just like a dividend would. If you want to see a video where I walk through the mechanics of how to sell a put, I'll have that video linked up above and down in the description. So basically, when selling this put, you agree to buy 100 shares of WYNN at 70 a share if by Friday's close on October 16, WYNN stock is under $70. If this happens, great. You'll get assigned 100 shares with an actual cost basis of $67.76, not $70, because remember, you got paid $224 to sell this put contract. I see this as a win in my opinion, no pun intended. In order for you to be down on your position of 100 shares, WYNN's share price would have to trade below $67.76. If that happens, you can just hold your shares until they recover. This is why we use this strategy on stocks that we're bullish on and we don't mind owning. The other scenario is this. If by Friday's close on October 16, WYNN stock remains above 70 per share, your contract expires without having to purchase 100 shares. You get your $7,000 back and you also received $224 as premium. You can now repeat this process and continue collecting premium every time you sell a put contract. To summarize, we should sell put options on stocks we like and select strike prices we're comfortable buying 100 shares at. So this is my put that I sold with WYNN stock on September 29, and on that date, I received $335 in premium. Fast forward 6 days later, and this is what my trade looks like today. So far, I've extracted 55% of the contract, and if I wanted to close out the position, I could do that. But in this case, I'll wait until expiration. Above is another put contract I have with Simon Property Group, which I've been selling puts on as well. Now, the last thing we're going to talk about is the risk with selling put options. The main thing I see when it comes to options in general is that people assume you'll lose money. However, with this specific strategy, selling cash covered puts, there is no risk of losing your money unless you get assigned those 100 shares and the company's price drops to the floor. This can happen with any stock in your portfolio anyway, so look at it from that perspective. If you do this with great companies like Apple, Microsoft, dividend aristocrats, companies you know and love, you will do just fine in my opinion. If you have questions regarding this strategy, comment down below and I'll be happy to answer all of your questions. I hope you got value from watching this video. If you did, go ahead and smash that like button, subscribe if you haven't already, and I will see you in the next one. Peace.